Welcome to Chapter 5 Practical Exercises to find out stock terminologies that we discussed in Chapter 2 to 4. So, in order to do that, let me log into the finance.yahoo.com website you see here on the screen. You can use any other websites like MSN, CNBC, we have the google.finance.com, and we have investor.morningstar.com. Any of these websites will serve the purpose, but I am using finance.yahoo.com because I know where to pull the information, where the particular numbers are there, and also it's easy to use for me. So if you remember, in our previous chapter 2 to 4, we discussed about three important financial documents that every business have. They are income statement, cash flow statement, and balance sheet. In chapter 2, we discussed about John's small coffee shop and flow of money in 1 hour. We converted flow of money from 1 hour to 1 year. We came up with the total revenue, cost of revenue, income before taxes, net income or earnings. In chapter 3, we discussed about three important documents: income statement, balance sheet, and the cash flow statement. In chapter 4, we compared the whole business with one share. On the left side, the whole business market price was $100,000 and per share it was $10. In the income statement, the net income was $20,000 and per share basis the earnings was $2, that is EPS, and on the balance sheet equity was $10,000, per share the book value was $1. And finally we came up with the price to earnings ratio PE, which is market price by EPS equal to $10 by $2 equal to 5. So now let's pull all those information from finance.yahoo.com for a sample or the example company called General Motors. Like our coffee shop, I am taking an example General Motors here. So the ticker symbol is GM, and I'm going to type the GM here in the search and hit enter, and it's going to load the main page where it has the all these information. And the first thing you see is the market capital, that is the for the whole business, which is 51.877 billion, and for per share basis, which is $36.53. So whole business divided by the outstanding number of shares will give the 36.53 per share. So the number outstanding shares information is not here, I will show you later. And then we have the earnings per share, which is 5.84, and then we have the PE ratio, which is 6.25. The first thing we came here because to look at those financial statements, three documents, which is income statement, balance sheet, and the cash flow statements. Those informations are available under financials. Let's click on that. So under financial, you see here the income statement, balance sheet, and the cash flow. So let me scroll down. So and then we have this annual, which is for the total 12 months, and then we have the quarterly for every quarter. I am going to set it for annual. When you come to the annual, we see these many years, information for these many years, from starting from 2019 and then 2020, 21, and then trailing 12-month period, which is the current period. So under the income statement for the John's coffee shop, we talked about few important terminologies. First thing was the total revenue, which was $100,000, if you remember from chapter 4, and then the cost of revenue, which was the $70,000, and then we had the income before taxes, which was $30,000, which is called pre-tax income or the income before tax. And then we had the tax. Here it is called tax provision. There it was $10,000 for the John's Coffee Shop. And then we discussed about the net income for the whole business, which was $20,000. And then earnings per share, that is per share basis, which was $1. For the General Motors, the total revenue for the year 2021 is 127,004,000. All these are in thousands. So I'm going to convert it to billions, which comes to $127 billion. Let me put it in the calculator here. And then second one is the cost of revenue. For the year 2021, the cost of revenue is $109 billion. I'm going to minus the cost of revenue from the total revenue, and let's see, it's 17878. So this is the third line here, the gross profit. If you see the gross profit, which is $17.878 billion. And then let's minus this. There is an expense. Let's minus an expense of $8.5 billion from here. Let's do that. Minus, which is equal to, so $9.324 billion of operating income. Okay. And then from there is an expense, non-operating interest income expense of 804, that is $8 billion. I'm going to take that and minus from here. Let's do that. Equal to $8.52 billion now. And then there is another income expense, which is there is an income which is 4196. Let me add that. It's an addition actually. I'm going to add it. Let's see, equal to, so the total income before the tax, or we call it as pre-tax income, which is $12.716 million. So, and then from that we have the taxes, which is $2.7 billion. I'm going to minus that, minus tax. Let's see what it comes, which is $9.945 million. But here we have 9.837. Let's see why that number is coming. I'm going to make this bigger. And if you see the net income here, we got how much? 9.945. You see here. To that, there is a preferred stock dividends which has to be paid to the stockholders, which is 1.82. Let me minus that from that. I'm going to minus this, which is equal to $9.76 billion. And there is a interest that came, which is 74000. Let me add that number here, plus, so after the adjustments we got, so net income for the common stockholders is 9837. You see the highlighted number. This is for the whole business. So now let's calculate the earnings per share, which is 6.78. And how did we get that number is, you take the net income, which is $9.837 billion, divided by the total shares outstanding, which is the basic average shares. Let's take this number, total outstanding shares, which is $1.45 billion, and let's divide this number by that number. We are getting 6.77 or 6.78. So that's what you see here, 6.78. So now let's calculate the price to earnings ratio, which is 6.25. So price to earnings ratio is equal to market price divided by earnings per share. The market price is 36.48. Let's take that number, which should be divided by the earnings per share, which is 5.84. Let's take that number 5.84 and use it here and see what we get. We get 6.245, which is nothing but 6.25. You see here, that's the price to earnings ratio. So now let's go to the balance sheet for the General Motors business. So here, for the total assets is for the year 2021 is $244 billion, and then we have the liability of $178 billion, and finally they arrived at, for the common stock equity, asset minus liability, they finally arrived with this number of $59 billion. And if you remember, if we divide this equity for the whole business by the shares outstanding, you will get the book value. So let's see what's the book value for the General Motors. So if you go to the statistics and then come down here, there is a book value which is 46.62 per share. That is the book value. So if you look at the market price, that is 36.48. So it means the market price is less than the book value, actual book value, that is cheaper. So which is good for the business. If you want to buy this now by paying $36.48 per share, you pay $36.48, but actually you will have $46.62 as a book value, which is good. For a buyer, for an investor, this is a good thing. So here we are at the end of chapter 5. In this chapter, we learned in real time how to read financial statements for a large company like General Motors by comparing with John's coffee shop business that we learned through chapters 1 to 4. I hope now all these terminologies and numbers are started making sense to you. But if you still don't fully understand, don't worry, you will get more clarity as we go further in the learning.